Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as StockCharts.com. So we've got ourselves a pretty interesting predicament in the market, and I'm going to talk about software two different ways. One is I'm going to talk about the articles I'm writing. I'm going to actually show you in behind the paywall on my website to show what I'm trying to provide for members, and just show you some of the calculations that I make outside the market, and then see if there's any value there for you. And the important thing that I want you to get out of that is that as the market rotates here, and I mean, I have friends that have already seen hundreds of dollars go away in some of their stocks, and I just it's disappointing to me because I've been showing weakness on a variety of different things. Obviously, my subscribers are kind of getting the bluntest view of it, but as we move forward here through this market, we could be in for a market that just gently pulls back and takes off again, which is kind of what I would have expected. But unfortunately, my data says no way. That's not where we're going. So I want to keep following it, but I want to share that with you today. And I just think I wanted to try and take a unique view of the market and let you know. I am doing a special this month in March for my March Madness sale. Save $363 on an annual membership, and you can find that at gregschnell.com/explore. So this is a little bit marketing, but more what I wanted to try and show you is that as this market has been going higher, I've had data start to go lower, and we're getting in that crossroads now. It still makes it hard, but at least it puts you on a much more aware footing to be ready so that you're not taking these big hits. And I think that's what I want to share the most is I'm all about the preservation of capital, not trying to get the last 5%. Anyway, maybe I should be more greedy, but I want to know when the market is starting to get frothy and shaky and telling me to leave. To me, I can't imagine anything more bullish than all these vaccines. But for some reason, my data is telling me to be very, very cautious. So first of all, this is the intraday view of the 60-minute view of the Nasdaq 100. And as you can see, this is a 100-period moving average on a 60-minute chart. And we're kind of stuck below it now, and we basically bounced up into it on Monday's close, and Tuesday pulled down hard. Looking on the daily view, everything looks relatively normal. It looks like no big deal. Here's our September pullback, and we're kind of back below the 50-day moving average, just kind of hanging around there. And what's next? And then on the weekly chart, obviously, everything still looks pretty good. The only thing we could really talk about is a PPO sell signal, but we've been going sideways for a month, kind of tempting that line over and over. Who's to say when it's actually going to get weak? So that's the focus I want to bring to try and illustrate some of the data behind the scenes. And again, we can set this up for the S&P 500. And it's not nearly as bearish. We're just falling below that 100 period on the S&P, but you can see that the chart is still much more sideways than down like the Nasdaq 100. Still holding on the 50-day moving average. 40 or the 200-day is a long way down here. It's 34.50, so that would be a meaningful pullback, I think. And if you ever wanted to know how to do that, you just click on Inspect. And if you wanted to go to the prior high, you just grab this, and as you pull down, you'll notice on the left-hand side all the way over, I can't move my cursor over there, but you'll notice over there it says, okay, 12.55% to get down to the S&P 500, and from the top it's a 496-point drop. That would put us right in the middle of the September-October action. If we go down farther, and as the 200-day moving average comes up, obviously those two won't meet this far down. It might meet whatever, somewhere up in here or farther up if we were to head lower. So anyway, just make sure you know how to use that inspect button. It's quite a handy little feature, and then you just press and hold. So the market on the day, on the PPO daily, you can just see a gentle little pullback here. We're still above zero. Everything looks relatively positive. And I'm going to shoot back here and get the weekly. And on the weekly, we're way up here. We're at 4%. That's a high level. I've covered that off numerous times, so I'm not going to get into that one this time. But basically, it goes all the way back to the year 2000. We were in 1999. We were accelerating up. So it was the last time we were kind of heading higher with a high PPO level like this, up at 4%. We're above a lot of the major moves in the market going back almost 100 years. So there's probably 8 or 10. Most of them peaked out right about where we are now, with 1 or 2 that had additional enthusiasm still left in the tank. So those are all cautionary signs, but they don't really help us with a whole bunch. So when I look at that, I think one of the things, so you write a blog and you try to explain to people what's going on. And so recently on February 11th, and if we just go back to the S&P, okay, so here's February, it's already, well, there it is, February 11th. And we basically, I published the article that afternoon, and we ran up for 2 more days, and now we're kind of working our way lower. We're still not very far from there. But more importantly, on the big picture, we can see that on February 11th is pretty much the top of this dome. And now we're kind of making lower highs and lower lows on the momentum indicator. And that's a really big deal for me, so I follow that. Now, we can talk about how to measure that and all that kind of stuff. I think more important is just understanding what it's trying to tell you. On every rally, we're getting less participation. So my strength indicator first gave me a caution signal in late December, and one could say, well, Greg, we've moved up a lot there. I would say true, but you have to be in the right stocks to have won. So as an example, a stock like Apple hasn't gone anywhere for 3 months, whereas some of the high-flying names have gone all the way up and all the way back, and some of the stronger groups at the end here, the energies, financials a little bit, and the materials have done pretty well. And so understanding that you're getting in this place where the overall market's getting weak and there's a market shift going on is a pretty important component, I think. So even before that, I was writing, here's on February 10th, and this chart is showing Ballard, and it's just a simple little breakdown. And of course, on StockCharts, you can click on this chart, and it just shows that we've been declining ever since. Now, I don't know if Ballard gets down to the 40-week moving average or the 200-day down here around $25. That would be a guesstimate for me. That's also the breakout level. But that's a pretty heady drop from 53 to 25. That's in half in a month. And if it was to keep going, then that obviously creates issues. So there's some stuff being written one at a time and that kind of thing. But more importantly, as we get into the market starting to decline and having trouble, we're actually in a place in the market where even if my indicator would be wrong about picking the top, the idea of this indicator is not to tell you when the top is. It's to tell you when the market's going to be harder to invest in. And so one of the things, maybe we'll just start on the left-hand side and we'll work our way over. But one of the things that happens is as the stock market starts to wane, my indicator starts to let go and add protection on lower lows when it gets into this middle area, and you want to be defensive down here. Now, when it starts to turn higher, that's pretty bullish. It takes quite a bit of effort to actually turn this higher. And so then it ran back up and we were in a nice strong market. So then right around the end of December again, funny that it was this almost same time of year, that it started to roll back down, and in January made a lower high. And to me, that was pretty warning. That was a pretty big warning. So we got our January correction and we bounced out of there. And then we ran back up, and on the run back up, we made a lower high again. And so the market was losing enthusiasm. So I was all bearish, getting very kind of concerned that the market was weak. And we really needed to be careful here. So then we put in, it rolled over just gently for a week, and then it absolutely let go. The point I want to make is when this indicator was starting to fail, it was a pretty good clue that you needed to be very ready to take profits. And even for that matter, the signal we got in December, we got all the way back to there very, very quickly. We visited it twice. So you would have had to done a good job of capturing profits, unless you're a day trader. It would have been very difficult to make this money and not give it back as we started to fall. So then we had a big, beautiful uptrend, and I call this wind at your back investing. And we start to get this big push, and where everything's going up, and it's really positive. And even the dip up here at the top isn't that worrisome. I mean, we wobbled, so I was like, tighten your stops in case it throws you out. But for the most part, we've still got lots of strength up here. So then we ran along, and down here we first fell below my 75% level. And you might remember it was like September 3rd or something. All of a sudden the large cap tech stocks had started to leave. Well, I was starting to get a little bit worried already, just because we had started to had been leaking for almost a month as this thing started to go higher, and then all of a sudden we fell. We consolidated for a brief period and fell again. My indicator came all the way down to this low level, where it says, get ready to buy when it turns higher, be wary of more moves down. So we got right down to this 25% level, fired back up. But on the firing back up, it was only a couple of weeks. And so we ran up for, let's say, 2 or 3 weeks. Then we turned back down for another couple of weeks. So it got a little rocky in here, and it was a little harder. But at least my indicator was telling us to be more cautious. It was just saying, we don't have the wind at our back anymore. It's getting a little bit more difficult. On this October low, I was like, okay, this looks really well set up here. We're ready to go. I'm just showing you one indicator, but I've got a whole sequence of them that I like to share. So anyway, we run up higher, and all of a sudden this thing takes off, gets back up above 75. I'm very bullish about it. I like it. And we start to run, and we run for another month. So very positive. I'm hitting the buy button, trying to stay in the market. And as we start to break down here, I start to talk about being aware of changing conditions in the market. We're getting to a place where it's going to be a little bit more stock picking and not so much index just running up. And what we found there was, all of a sudden we had this really hot area of the clean tech soaring. We had all these new IPOs soaring. We had all of these SPACs start to come out soaring. And so the market felt really buoyant, but underneath the surface, a lot of stuff was just kind of migrating sideways, like Apple, Amazon, Facebook. And then we really started to notice that this was getting weaker, and we got like a 4% drop one week, and then immediately after we had this hard fire up. And this run up, quite frankly, was very hard to catch unless you were long on that first low, and then it was like an 8-day run in a row. And then the market has started to break down again. But every time with less participation in the groups that I'm monitoring. So we get below 50%, still again another worrisome area. And to me, it just tells us that we're in a trading range. It's difficult. It might be easier to let somebody else make all the profit here rather than trying to pick your spots. Okay, let's just go into the website here. And what I want to show is once you get in here, there's a daily setups page that we publish every day. And I'm going to get to that in just a second. But I do a weekly video. And the purpose of the video is to try and tell what I see going through all of my charts, and I try to narrow it down. And so in particular, this week is the weekly summary, global indexes, why I think the market is really expensive here. And then I published some, I actually went in and talked about the article that I mentioned earlier, the two questions article from the market top near February 11th, and then how Tesla versus BlackBerry looks compared to their topping signs in the back. And there was a great article written called When Everyone's a Genius. Now, again, my timing is going to help. It's not going to pick the top, but the idea of the indicator is to try and make this smooth. So I go and try and show all the different ways that I look at the market. And if you're not a person who likes breadth or whatever, then you might just ignore that. If you're a commodities person, you might just jump in and grab that. So anyway, you can go see the market, I'll call it, in any way you want to see it. Now, the other way we do it is, so we do a video and then we do a newsletter. And the newsletter is a little more different. Probably something you haven't seen before. But on the idea behind the newsletter is it's something you can either read or you can hit the download button and just work through. But as I'm working through here, I'm publishing, a brief commentary, kind of a couple of pages, and at the end here it's summary. I've closed the majority of my positions and hold a high cash weighting. The market is one of the hardest to judge here. It's definitely not wind at your back. And so this is on Saturday, I write this, and then on Monday we get the big 3% update. But the big thing that the point is, okay, so Monday was up and Tuesday could have been up, but it was down. Nasdaq was down over 1.6 or 1.7%. When you have this market rotation this hard, and my data is just saying it's very difficult to find things going up here. The majority of market groups that I analyze as a big bundle are heading lower. So really need something strong to change trend. And usually that's some sort of a market reset that you kind of get to the bottom. It doesn't have to be 35% off like March 2020. But the idea is to be aware of that. And so when we see that, the idea of trying to make sure that people are aware of how weak the market is. I have some other indicators, and so the main one is the one that was plotted on the StockCharts plot. But this is also the two other indicators I use. All three of them of different time frames and different calculations are all telling me market's really weak. My quickest one is down at 25%, 36%, and 37%. So when everything is showing that much weakness, I think it's important to just know that you want to try and protect profits, okay? So then we get into different ways of analyzing the market, and I'm pointing out this high volume run. And without going through the whole newsletter, the idea is to use a series of charts to explain a story each week. And at the end of that, what I'm hoping to do is help people protect their profits. Like everybody gets to trade the market the way they want to trade it. I can only provide the data that I see. But again, my strength indicators are all starting to weaken, not just I'll call it the slowest one or the smoothest one, which is the SSIH. When these are rolling over quite quickly, we want to be aware of that potential for softness. So we could float down to the bottom of this channel, call it 3650, and bounce off there and turn back higher or whatever. This does a pretty good job of helping us pick the bottoms. So at least we know when to get back in, and then we can try to ride the wave back up. But this is the time to be fully invested with everything going on and basically just try to catch as much wind as you can and get the profits running as hard as you can. When you get into this period here, and again, some of this is still trended higher, and I've had a wonderful fall coming all the way in. I still hold an energy name at this point and two other stocks. But the purpose of the indicator is not so much to be right on the day. It's to tell you when the wind at the back is no longer there, and it's going to be a lot choppier water, so at least you can define your risk a little tighter. If a trade you take doesn't work, then you can quickly move along. So looking at that indicator, again, the idea to try and see what's going on, I think is helpful. To me, it's really helpful. It gives me, if you're one of those people who has trouble being in the market because you're worried it's always going to fail, when you want to be in there is when the market is running really hard, or at least everything's trending higher. That may be for 2 weeks or a month, but at least you're aware that things are starting to improve and you want to be back in the game. On Monday's low, so Friday's low, Monday rally, my indicator would take days to turn up. It's not going to turn up in 1 or 2 days. It's typically going to take a week to find that bottom. I'm trying to do more work to tighten that up. But rather than just be blindly optimistic because the future is so bright, we got to wear shades, this indicator helps me see what institutional investors are doing to push the market around. And are they rotating just out of one sector and into another? In my case, no. What it's telling me is that 75% of the industry groups are headed lower, right? In my quickest case, 75% are headed lower, and it's not just industry groups, it's charts from around the world and a whole bunch of other stuff I'm trying to get the feel for. But in this case, 2/3 are headed lower. So if 2/3 of the charts I'm looking at are headed down, we're now down to 1/3 trying to find what's going up, but we're faced with a headwind that twice as many are going the wrong way. So the idea of preserving capital, I think, becomes much clearer, and I don't have any problem being mostly in cash on a Monday morning when the market rallies 3% because the market is so soft here. Conversely, when we go down, we sit down here for a while, we build a base, and then we come out of the base. That's a little nicer entry for me. So anyway, again, the idea is not to, whether you choose to subscribe to Greg Schneller. That's not the point. What I want to try and make sure people are aware of is there has been very frothy charts out there, and if you're not trying to keep track of the big picture in some way, you're probably going to get your head handed to you relatively bluntly. And a chart, so here's Ballard Power. Again, I like this chart. It's a Canadian company out of Vancouver, blah, blah, blah. I listened to a presentation last week on them. It's probably going to the moon. I really do like it, but I don't need to buy it going to the moon at 53 if I can pick it up at 25. So the goal is to try and use this information to help me time when I get back into the market and I can find the strong stocks that I still want to own. But I don't have to ride these big 50% down waves and then try to figure out how to recover. And I posted some charts just today, but here's Snowflake. So this one, lots of institutional investment in here, sitting at around $240, comes all the way over. It's got to hold this area. If all of a sudden this chart starts to break down, that's a pretty big deal. And then we have the one called C3AI. What you see IPO'd, these charts don't look like anything, but this was 100 to 190. It double tops up here at 190, so you get to 176. You think you're doing pretty good 2 weeks ago. And again, my chart was rolling over. I'm writing that article saying, be careful here. And all of a sudden, this thing comes down $75 or 40% in 2 weeks. Now, could it go right back up? Sure. But I think what most of us would like is the knowledge that this whole thing's getting a little bit weak, especially to play in these frothy names. And so if you go to, I'm just going to pick one of the those car companies that have been the electric vehicles that have been all the rage here. So you're $36.80 coming down to 14, almost a 2/3 discount. It doesn't look like much on the chart because of the compression of the scale. But if you were buying this breakout at $25 and, Greg's data is saying it's getting pretty weak out here, at least you'd keep your stop relatively tight. So you might have got 3 days of big gains, and when this one started to make lower lows after a crazy climb, like 24 to 36, 50%, 3 days, then at least you have an idea to try and set that up. So, we can go look at Tesla now. And again, Tesla is not my favorite stock to own because I think it's broken long term. And many will argue with me. That's okay. They can own it, and I cannot. But here's the point, really simple. Here's the scooter ranking up at the top of this chart. And it's starting to break down. And again, when this breaks down, we don't know how far it's going to fall. But back here, Tesla was very, very positive for, call it 6 months. When it fell out of bed, it never really got back up into the 70s for, a year and a half. It was really dead money. It went all the way down to 35, so you lost 50%. And then all my indicators started to fire up on Tesla. Get in. I don't know, I saw this one. I wrote it in my newsletter and said, this looks like a nice setup. And then it broke out to the upside 70%. I would have not thought that. So anyway, I would have missed it. But to me, everything on this chart is a sell signal. But even if it's not just this chart, you're at $900. My indicator says everything's getting weak. You've lost almost 30% in 2 or 3 weeks. And if somebody would have just said, gee, the market's really kind of violent here, you should be careful, I think that's helpful data. Anyway, so that's one way I think we can help a lot. And if that information works for you, great. And I'm not... I guess I am trying to sell it. I'm trying to tell you why there's a good reason to be aware of this kind of data. So if you're trading large amounts of money and you really want to make sure that you've got something to work with, that's the purpose of this. Now, up at the very top of the website here is our daily setups, and Dwight does a great job of publishing stuff in here. And on this, each day every second day I put in the Schnell Strength Index, and then it's on the weekend. And then Dwight posts setup. So at least you got something to still go for. It's not like we're a negative Nelly here. Here's some nice setups that are still working. Maybe you want to try and follow these ones. But at least you know the risk in the market when things are all set up to go down. Okay. So to get back, I'm just going to go to the PowerPoint here. If you're interested in that at all, it's gregschnell.com/explore. Hopefully there's something there for you. And again, if you're fine the way you got it going on, I'm all good with that. The last thing I want to show you is on this 2 questions I have article. You can find it on the Canadian Technician blog, so click down here. Keep scrolling, the Canadian Technician, and then you'll find this 2 questions I have. Read through it. And my point in this article and in my newsletter this weekend and in my video and everything, I'm trying to raise awareness about how radical the volume got on the Nasdaq and how this could actually mark a meaningful major top. And I compare it back to the year 2000 and why there's a lot of similarities. But we also have a lot of other things going on that are similar. We have the SPACs, which is kind of the Wild West club. We have the EV market breaking out just on nothing. We have stocks trading at 60 times revenue, not 60 times earnings, 60 times revenue. We have other stocks 145 times revenue. It just keeps going. The craziness is really strong. So anyway, we're trading around 4 billion shares a day, and then the market goes on this euphoric run, literally call it the vaccine run. So we have a 4-month vaccine run, and we're at 10 billion shares a day. We literally multiply up from this 4 billion to 10 billion. To me, that's pretty scary. Anyway, go check out that 2 questions I have article and see if I have any logic for you there. So with that, I'm going to say thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. You can also see the recording on StockCharts TV YouTube page. Thanks for taking the time to join me. Have a good, safe March, and it looks like the vaccines are really kicking in. I just saw J&J speaking, and maybe a May-June timeframe looks pretty good. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're going to bring you daily content from an incredible collection of technical analysts and financial experts.